Algorithms, should you fear them or can you make a lot of money on them? Welcome back to the channel. My name's Henry, and in this video, we're going to be making our pockets bigger and our minds and knowledge more vast. I truly believe that the opportunity for trading now for retail investors is not going to be as profitable in the future because of algorithms. And I think any option trader right now has a very huge advantage versus a stock investor. In fact, as a stock investor for a very long time, it has not really been that profitable. I don't really know any stock investors, especially on YouTube, that are very profitable. They're mainly profitable because of the sponsorships. But for option traders, there's actually a lot of profitable option traders because right now the algorithm space is not penetrating option traders as hard as it did for stock traders. In fact, most of the volume on the New York Stock Exchange and all these other exchanges where people are trading, it's actually not people, it's actually algorithms. But that's not the case yet for options. So Coach Henry is going to educate you as an ex-Goldman Sachs trader with almost a decade of experience in the industry. In this video, I'm going to be sharing my thoughts on why algorithms are increasingly taking over trading and what that means for the future of financial markets. So first of all, it's important to understand what we mean by algorithms in trading. An algorithm is simply a set of rules or procedures that are followed in a specific order, okay, to solve a problem or achieve a specific goal. In the context of trading, algorithms are used by computers mainly, and the computers do all of the trading on behalf of other people. They use and analyze market data, and they make buy and sell decisions based on predetermined criteria. These people on Wall Street, or really programmers, Python, people who know programming languages, they put in a certain criteria, whether it's earnings or whether it's momentum, and really it could be 100 different factors, and then the algorithm is doing the work for them. So why are algorithms taking over trading? There's actually several reasons for this trend. One of the most significant factors is the increasing amounts of data that is available to traders. With the proliferation of electronic trading platforms, there's an enormous amount of trading data that can be analyzed in real time. And this data includes everything from price volumes to news, social media sentiment, and much more. Algorithms are able to process this data much faster than humans, making it possible to identify trading opportunities and make decisions at a much faster pace. Another reason for the rise of algorithms in trading is the increasing complexity of the financial markets. The financial markets are becoming more interconnected and more global, with a greater number of instruments and assets being traded. And the complexity makes it difficult for human traders to keep up with all of this information that is available, making it more efficient for algorithms to analyze and interpret this data. So that's pretty much why the stock market's kind of screwed. There's not that much money to be made. Yeah, sure, by buying and holding, you can absolutely make money. But day trading stocks? Yeah, you wish. That's basically just some fake guru telling you, hey, buy my course and I'm gonna make you a rich stock trader. That's actually not true. Stocks cannot really do well if you're trying to day trade them. You're way more likely to lose money. And that's actually why I'm working on OptionsFi. That's why my friend is building it. I actually had the idea myself and he's implementing that idea. And that's why I'm really excited about algorithms for a very long time now, because my financial education at Drexel University in Philadelphia, I learned that, algorithms are doing a lot of work, and that's going to be the future because my degree was not just in finance, economics, accounting. It was also in data analytics. So yeah, I was kind of a nerd. I had many degrees and I basically didn't do much fun stuff. I just studied. But at least that made me rich, and I became rich because I really understood that not only algorithms, but options were really the future of trading. And specifically, something I'm really excited for about the algorithms world is that we could use software to our advantage. And I know that OptionsFi is going to have a price prediction tool, which is going to be released by the end of 2022, which is going to scan the entire S&P 500 and use predictive models to come up with estimates for 3, 6-month, and 12-month price targets on top of giving recommendations on trending profitable picks. So in the first quarter of 2023, the software is going to be even more of a game changer in finding ideas for me to then analyze and do further option trading on. Now guys, listen, software is going to be a game changer, but still humans are going to have a big aspect within trading. I'm never going to just follow a software, but I'm going to use lots of different tools to generate more ideas myself. And ideas, for example, are worth a lot of money. In business, they're kind of worthless if you can't execute them. If you have $1 million idea, but you have no funds to open up the brick and mortar business, it's useless. But ideas in trading, they are worth a lot of money because, well, you can execute on them right away. And it's not like you need a lot of money to execute on a trade. I mean, a lot of my trades, I just use $500 or $1,000 because I do focus on growing a smaller portfolio because that's just naturally where most people are. If you're watching my videos, you're probably not trading a multi-million dollar account because those type of people are not really watching YouTube. They have already done it. They don't really need me. But people that are trying to grow a small account, that's what I focus on. And one thing that's kind of scary for me included because, I have a $2 million account, but I'm trying to get to $10 million in probably the next, 3 to 5 years. I think that algorithms are going to become a very big centerpiece of growing your portfolio. In fact, algorithms are taking over because they're more objective and less prone to human error because humans just make errors. Humans are subject to a wide range of biases and emotions that can affect their decision making, such as, fear, there's greed, there's overconfidence. I see so many people overconfident. That's actually one of the biggest issues. Some people make money and they just lose it all back. Algorithms, on the other hand, are programmed to follow a set of rules without any emotions. They don't really have any, so they make less mistakes. And this can lead to more consistent and reliable results. So, what does the increasing use of algorithms in trading mean for the future of the financial markets? Some experts predict that the algorithms will eventually replace human traders altogether, leading to a more efficient and transparent market. Others believe that algorithms will simply augment human traders, allowing them to make more informed and accurate decisions, which is basically where I stand. I don't think algorithms are going to replace human beings, but I do think that algorithms are going to help us make much better decisions, and they're going to help us make more efficient decisions that are going to be more consistently better. And if someone is not using AI or machine learning or other methods of software, then they're going to be left behind. Personally, I believe that algorithms will continue to play an increasingly big and important role in trading, but they will never be fully replaced by human traders. While algorithms can analyze data and make decisions faster than humans, they really lack the ability to think creatively and adapt to changing market conditions, at least for now. Human traders will always be needed to provide a more holistic perspective and make a judgment call that an algorithm really can't do. And that's why I'm not in fear of my coaching job or my coaching passion that I love to do so much just yet. But if you were to ask me, if I were to have to stick to one strategy, I'm still very bullish on selling options in the future because, well, pension funds and hedge funds, they still have a mandate. And that mandate is that they have to hedge their portfolios, they have to protect their investors. They're dealing with billions of dollars, and what they're going to have to keep doing is buying options. And as long as they keep buying options with this big amounts of money, then the people who are selling options are still going to be more profitable. And in my experience at Goldman Sachs, what it has shown me is that selling options can be a more consistent and profitable way to trade compared to buying options. The income potential from collecting the premium and the limited risk and the defined and limited potential loss is a very strong advantage. And I like having the ability to take advantage of time decay. This is a very compelling reason for me selling options because when I sell an option, I basically just look at theta. If theta is, 0.05, I know I'm making $5 a day because that option is eroding by $5. That theta is working for you when you're selling options and it's working against you when you're buying options. But obviously, if you have an information advantage, you can buy options. One of the best small account trades I've made, and I was using AI and algorithms, was on Airbnb when I saw that, it said buy put option on OptionsFi. And the algorithm uses factors and math for its predictions, but when I really looked into Airbnb to try to understand why is this recommendation being recommended, I truly saw that it was on the verge of collapse when it was over $100 per share. Now, the home sharing platform has experienced a rapid rise in popularity. I'm going to give it that. But recently, the company's stock has been struggling, and it has been struggling for a very good reason. In fact, I am shocked how bad my experience has been lately. I've been traveling the world. I've been to 12 countries, and I primarily use, Airbnb. And one of the primary factors contributing to Airbnb's stock collapse is the decline in customer satisfaction. While Airbnb has traditionally enjoyed a strong reputation for customer service, recent events have led to a decline in customer satisfaction. The company's failure to address customer needs is really proliferant right now. As the home sharing market has grown, more and more companies have entered the space, offering a wider range of services and amenities. And Airbnb has struggled to keep up with those changes, leading to a decline in customer satisfaction and loyalty. Now, pretty funny story. Hosts nowadays on Airbnb, I don't know where their mind is at, but they expect way too much, okay? When you go into a hotel, it's pretty easy. You do whatever you want. As long as you don't like crash and burn something, you can leave the place a little bit dirty. You can be yourself, okay? You don't have to clean after yourself. It's a hotel. You have a good experience. But with Airbnbs, nowadays, hosts expect you to do everything. Wash the dishes, clean up after yourself. Heck, I feel like they expect you after you go into an Airbnb, you should leave and leave them some furniture. You should buy them some furniture. The Airbnb hosts have become so arrogant, and I do know that they do make a lot of money. And that is because the short-term rental market is pretty hot, but I don't see Airbnb really dominating this area. I feel like hotel industry is becoming a lot more competitive. What is your guys' thoughts? Do you use Airbnb? What's the alternatives? Or do you like hotels more? And the interesting thing is, algorithms can find critical factors that are impacting a company's financial performance and investor confidence much quicker than a human. For me, it was obvious after I spotted that trade. You know, basically it's a no-brainer since I've been making weekly income by selling call credit spreads on Airbnb, basically being pretty bearish. In conclusion, algorithms are taking over trading because they are able to make vast amounts of data and process that data, and then they can handle much more complex things in the financial markets. They can spot trends much faster. That's why I've made a lot of money on Airbnb. And as a former Goldman Sachs trader, I've seen firsthand the value that both algorithms and human traders bring to the table. And I believe that a balance between the two is the key to success in the financial markets. So my advice is don't fear AI, use AI to your advantage. At least for the next 3 to 5 years, I do think that human beings are going to still be able to make really profitable trades and options. Specifically, consistent income is going to be possible. But if you look at the stock market, it's not that easy anymore. And I think that same is going to apply in the option market. That's the whole thing with this world right now. Everything is changing so fast. And I think the option market is going to change very fast as well. So if you want more help, you can reach out in the link in the description. You can join my Discord community. You can communicate with me 9 to 5, Monday through Friday, see all my trades, and be happy to work with you. But anyways, make sure you subscribe to the channel. I'm going to make a lot more videos like this. Thanks.